Hey folks, welcome to the October 2023 Boom Bust Invest house price update, where we'll cover off the UK economic headline figures and the house price figures, the main house prices, house price indexes in the UK. So starting off with the GDP, 0.2%. So this is for the quarter ending June 2023. So just about keeping its head above water. If it goes negative for 2 quarters, it's a recession. We'll take a look at that. We're kind of just avoiding that. Unemployment, which is the other big one. GDP and unemployment are the big ones for the house prices. When you see those go up, or see GDP goes down and unemployment goes up, that's when you see the biggest house price declines. So unemployment 4.3%, still relatively low on a historic basis, but it's heading in the wrong direction, as we'll see. And then inflation, which is heading in the right direction, still pretty high, but 6.3%. That's for August 2023. So we'll take a look at that as well. So let's start off with the unemployment figures then. So you'll see this is a longer term graph heading back to 1971 there. Now you can see here that over this sort of longer period, it's actually quite a steep little decline there, rise in unemployment. So it just depends. We have to see if that continues or not. But as you can see, it's sort of heading in the right direction. It doesn't look like a lot, but this is going back to 1971, over 50 years ago. So on trading economics, then you can just see a little bit of a short-term zoom into that rise, and you can see from the start of 2023, you can see actually sort of a steady increase in unemployment. So if that increases, that will then increase the chance of a bigger house price decline. So it's just a case of tracking that, but at the moment not heading in the right direction. So heading on to the gross domestic product, GDP. Again, this has got a very long-term graph. You can see that when this was the great financial crisis, 2007, 2008. So when you get those consecutive quarters, that's when you start seeing the problems. Got down to -2 there, and you can see we're teetering on the edge of 0. It's when we go below 0, that's when the problems will start, but we're not there yet. So we have to just basically track it and see what happens. Again, on trading economics, this is the year-on-year annual growth rate. Again, we're just sort of not really going anywhere at the moment, and that's been the case for quite some time. It's only going back to 2022 and we're seeing some growth. So once again, if that trend continues, that goes negative. So we have to see if that materializes or not. And then moving on to inflation then. So as I said, we can see that coming down. So again, just looking at longer term charts here, it's going back to 1989. So that's why it looks so steep, but it's coming down quite steeply as well, as you can see. So the central bank interest rates rises are having the desired effect. Much as we don't like them, they had to get this inflation bubble down. So it's actually bearish for house prices, because it means that something's probably going to break, and that we're more likely to see that recession with associated job losses and then associated house price declines. So again, yep, that coming down is not necessarily a good thing for house prices, although it's a good thing for your pocket. So the Bank of England money and credit report for August 2023. And so saying here that there's a positive statement, if you can call that. The net borrowing mortgage debt by individuals increased for the 4th consecutive month to 1.2 billion in August, up from 0.2 billion in July. But that's tempered by the sort of negative mortgage approvals. figures, which is for house purchases, fell from 49,500 in July to 45,000 in August. And that's the lowest level in 6 months. And that net approvals for remortgaging dropped from 39,000 to 25,000 during the same period, and that's the lowest since July 2012. So activity in the housing market, in the mortgage approvals, is definitely declining. So again, heading over to trading economics just to see that graph heading down here. And then on the longer term, the 25-year chart here, you can see there's a definite downtrend that's breaking down below, the sort of range here from 2015 in terms of mortgage approvals. And as you can see, it kind of never really recovered an awful lot after the financial crisis here in 2007, 2008, 2009. But it's definitely low, and it's not that much lower than, it's not far from the sort of second lowest point, which we actually reached recently as well, since the great financial crisis. So, and as you can see, we're sort of, the mortgage approvals are just heading down, down and down. So the sort of medium term there, that trend is obviously quite steeply down as well. So with the sort of narrative that we've got with the looming recession, you might expect that to continue. And then we're not far off the actual levels that we've seen for the 2008 financial crisis. So again, it's just a case of tracking that at the moment, heading in the wrong direction there, obviously. The big thing will be getting lower than this on a technical analysis basis. You can see that that's an area of support for mortgage approvals. If we break that, then that's very bearish, and it looks like it could possibly even go lower than the great financial crisis there in terms of mortgage approvals. So we'll have to wait and see what happens there as well. The Office of Budget Responsibility, who obviously do a lot of statistical work on where they think house prices are going, the amount of cherry picking is probably up for debate, and their forecasts are probably up for debate as well in terms of their accuracy. At the end of the day, they're still guessing, even if they are using a lot of statistical analysis here. But even they're saying that house price growth will sort of continue down, reaching a bottom of 8% in Q2 2024. So, and then magically spiking back up to sort of normal levels and leveling off there. Well, we'll see about that. I mean, this seems to be coming down quite quickly. I mean, Q2 2024, some 2024, not that far away. If we see this recession, we're likely to have a much more prolonged decline into a bottom, probably around about 2025. This is probably the best case scenario that they're giving out here, because they kind of maybe have a vested interest. So that certainly doesn't see this. For what reason would it just go down to a bottom here and then just spike up like that? So I think it's probably like slightly longer to when we actually see the bottom of this house price crash, correction, whatever you want to call it. So the house price index from this is actually that Halifax house price index here. So you can see over the longer term, going back to 2000, over the 1 year, we can see it coming down. So the August is quite a big drop in Halifax house price index there, and over the longer term, you can just see, so this has got to go back to 2000, quite a long time. So we can see a definite topping pattern here. We're breaking down below that low, so we're making a lower low here. So the trend is definitely reversing there. So that's the UK economy part of the house price update. So part 2 will be the actual headline house price indexes. So thanks for listening, and see you in the next video.